Hi, welcome to MCS. This is Chekri. Today I am going to discuss one strategy. People with very low capital feel that it requires a lot of lot of money for deploying option selling strategies and that too with adjustments. Today, now I will be discussing one strategy called as calendar spread, which is well known by all others, but knowing itself is not enough in deploying the strategies. We need to know when to execute which strategy. There are n number of strategies which can be executed, but one has to know at what time the strategy has to be deployed. Currently, I have deployed this strategy in one of my stocks. I will be showing it in later. Now, I will be explaining what is this calendar spread and how it helps the low capital people. For people with low capital, they require very low risk because if they lose, they can deploy straddle or any other iron condor or bull call anything. The risk will be little bit high compared to their capital. Though it requires around 60 to 70,000 or 1 lakh in stocks to deploy any hedge strategy, but the risk will be almost the same as the reward. I am coming with this calendar spread because it requires very low risk as well as very low capital. Okay, what is calendar spread? One has to buy 1 month, next month call or put, and sell 1 month call and put of the current month. Confused, right? I'll be explaining in detail further. See, for example, if your view of any instrument is long, we need to select put option. And if your view of any instrument is short, we need to select the call option. Now, how that helps? Generally, people do calendar spread at the money strike, but this is different from what the others do. So the payoff, I will be explaining in sensible, so it helps you in understanding very clearly later. So the payoff looks like this. As if your view is long, we are selling one put option of the current month and buying the put option of the far next month. So the risk involved is very less because already if the stock or indices fall from there where you have executed, there is no need to worry because they are having one put option at far of the month, and that helps in gaining the profits as well as in short. If you are having any view of shorting any stock or indices, we will be selling in the money call and we'll be buying in the money call of the next month. So if your view goes wrong, instead of going short, if the instrument goes long, the next month call will be helping you out in that. So this is the main advantages of this calendar spread. Requires very low capital, requires very low risk, and the main thing is it is very easy to adjust. Disclaimer, if you need to know how to adjust the option strategies. Okay, why I am coming with this? Now, based on my system, I have selected this. I have executed one trade in Tata Motors today. Now, let me explain you in sensible how this helps. So, the Tata Motors price was 290. Is 290 current by closing. My view for August month is it will be slightly bullish, not so bearish. So what I will be doing is I will be selling the in the money put option. These are all the call option, these are all the put option. So I will be selling 26th August 300p one lot. So the break even looks like this. If the stock falls from here, I will be in lot of trouble. So what I do is I go and buy the next month the same strike buy. Now see, if even though the stock falls from here, okay, even though the stock falls from here, the next month buy option of put helps me in gaining the profit, in losing, in gaining the loss. Okay, this is the strategy. Now see the funds required for this. It's only 70,000 after both the legs are executed, and see the break even as well, 282 to 322. It's almost equal. It's not almost equal to. It's little bit less than the straddle. Okay. Now, why I have taken this strategy? This payoff is not exactly correct because it's it doesn't show the correct. The difference of these two is the loss for this strategy for any instrument. Okay, what made me take this strategy in Tata Motors? See, one has to have the good trading system for executing any strategy. Depending upon my trading system, I got this call of executing this because I have not added all the indicators here, so I will be covering later that I will be covering in later videos. So depending upon the simple price action, see the line over here, which is the support, major support. It has recovered 1, 2, 3, and fourth time also it's trying to recover from here, as though it is been the stock is falling, but it's in the range. So I thought of executing the calendar spread over here with a stop loss of 280. Okay, I've also added one alert. See, you can see the stop loss has hit as 280. I have to exit the strategy. So now I'll be showing my positions. See, these are my positions over here. I have a couple of those, and I will be showing Tata Motors. See, one thing is I want to tell you is I have taken the strategy at around 296, not at the end of the day. I have taken around 296, but later the stock has fallen from 296 to 293, which is 3 points. That means if I had executed any of this, like suppose say if my view is bullish and I am only selling the put option by 293, I would be I would have been the loss of 996 for the current day. Okay, there might be also the gap down chances as well if we don't know that. And also if we are doing any straddle, and also see, I have not done what is the price I have executed for 393. It's 13.4. See, this is the loss I would have made if I had executed only the naked put. Even though if I would have hedged it with any put option, sorry, okay, I'm doing. I would have made around 293. I would have made 4,000 loss. Of course, this should be around 6 rupees. Say. So the loss will be more. I think these are not the correct, but the loss will be more if I have executed the bull call spread or any strategy other than that. Even iron condor would have given me the loss if I have done that. So I have executed this around 296. Even now the stock falls for 293, I'm making a profit of 1700. So the deployed capital is 70,000. I'm making 2,000 rupees, which is 2% for approximately 1 lakh. So when do I adjust this? Yeah, I will be adjusting this if it even falls further. Simple. I'm not going to teach you I'm not going to discuss about the adjustment strategies over here. I would simply say one thing, like if you're fully skilled in options, you would sell call option, far out of the money call option, in order to cover the loss if the stock is falling further. But also you need to know, what if the stock goes up, you will be making the unlimited loss. So better, if you are not good at adjusting the options, better exit this at keeping a stop loss. Okay. Disclaimer: this is only for the educational purpose. I'm not any SEBI registered or analyst. Please do your research before executing this strategy. Yeah.
Yeah. One thing I forgot to mention is this strategy works very well now because we are having very low VIX. Now currently India VIX is trading around 12.8, which is a multi-year low if I am not wrong. Okay. If VIX rises from here also, there is no problem, because the the put the what we have sold and what we have bought is put option. Even though if mix goes up, the price of put option will be going up, and as well as the price of this put option which we have bought will be also going up. So there is no problem even though mix goes high. So this is very good strategy in low mix as well. Yeah. Hope you like this video. Thank you.